Hey guys, hope you and the families are doing well. In this short YouTube video, I'm going to teach you one of my favorite swing trading setups that is called the trigger bar. Now, a trigger bar is very easy and straightforward to learn and recognize. Oftentimes, it's a low volume inside day that forms around one or more key daily moving averages. Now, that could be in the context of a pullback or a continuation type base that is building. That could be a flag, a wedge, a pennant, a Darvis box, cup and handle, volatility, contraction pattern, those sorts of bases. So by the end of this video, hopefully you'll be able to recognize these trigger bars and understand where to look for them as well. I'm going to take you through my 400-page slide deck that is available on my platform that I have on trigger bars. I'm going to take you through historical examples to present day examples so you can see these are just timeless, and it's about dialing in the pattern recognition and being able to identify leading stocks forming these type of setups. Before we get into it, I'll let you know that Market Surge are today's video sponsor. They're my go-to resource for analyzing company fundamentals. If you are interested in a discounted trial, then you'll find a link to that in the description and the comment section below. So let's get straight on into the video. So as I said, this is a 400-page PDF that is available on my platform, and you'll also be able to download a shakeout demand tails, gap down reverse bars, and lots of other resources on my platform as well. So let's very quickly just go over what is a trigger bar. So trigger bars, as we go through some examples, are going to look like low volume inside days. Okay, low volume inside days. They don't have to be an inside day, but I do like inside days around one or more key daily moving averages. Okay, so what we're looking for is we're looking for Japanese candlesticks that often look like this. Okay, as examples here, I've just shown you like this could be a hammer candlestick, then you get this inside day. This here could be a nice looking bullish reversal bar, then an inside day. Here you could have a hammer, and then you have what I call a gap down reverse bar, then an inside bar. Here this could be a nice bar, then kind of a gap down reversal bar, then a tight bar. So it's these tight bars that we're looking for. Okay, now we're going to dial in the pattern recognition, because oftentimes I'm looking for these in the context of developing continuation bases, flags, wedges, pennants, cup and handles, VCPs, whatever it may be. Okay, or in the context of a really strong stock that's pulling back down to a key daily moving averages. I'll teach you what those are that I'm looking for. Okay, so it's about looking for these type of candlesticks in leading stocks as they are either pulling back in and or building continuation type bases around key daily moving averages. So let me just scroll down and take you through a couple of examples. So I appreciate this may be a little bit kind of zoomed out for you here on YouTube, but as I said, you can access the platform, currently have a trial available, then you can go and download this for yourself and watch the tutorial videos along. Okay, but what we have here is we have setups and trigger bar examples going from way back when. Let me just actually fast forward a little bit. We're going to go all the way back to the 1970s. I'll just show you some examples. We could even go back to the 1920s on the weekly chart. Okay, low volume tight inside bars are not a new phenomenon. They have been around for over 100 years, and if the stock market's still here in 100 years, I think they'll still be here in 100 years. Okay, so what am I looking for? Well, what I'm looking for, okay, is this to happen. What we have is the 10-day EMA, which is going to be the black line, with the 21-day EMA, which is the blue line, and the purple line is going to be the 50-day simple period moving average. So the most common place where I'm looking for these preferably low volume tight inside days is going to be around the 10-day EMA, the 21-day EMA, or the 50-day simple period moving averages. Now, what you can quite often get is a clustering of those moving averages. So you could have this low volume tight inside day, say like AG, which is a silver stock back in 2016, and it forms right in between the 10-day and the 21-day. Okay, AMD 2019 forms just above the 10-day EMA, but you can see the constructed basing action that's forming here, kind of like a little kind of flag Darvis box film building here. Cyrus Logic back in 2010, bit of like a Darvis box. VCP, how it's tightening, the volume is drying up really nicely on them. A couple more examples as well if I just go down here. So now we can go back to the 1970s. Okay, some of you may be familiar with the name Schlumberger. Okay, still around today, big oil and gas stock. But what you can see here is you get this really tight bar, and look how it's sitting on a clustering of the 10-day, the 21-day, and the 50-day, and the volume is below this black line, which is the 30-bar average. You'll also notice on a lot of these examples there's some blue dots coming through on this line. Now this line here is called the relative strength line. Okay, it's a free indicator that I created on TradingView. search my name on TradingView, you'll find it. So what I like looking for as well is the stocks that are hitting 52-week highs, these blue dots on the relative strength line. That's telling me that stock is very, very strong versus the S&P 500 this is set to. So I'm looking for those leadership stocks. Again, more examples as my phone goes off in 1975. CST, okay, builds this kind of Davis box, gets really tight on the 10-day, inside day low volume, plus it hits a 52-week high. So this is just a little subtlety, okay, a little nuance for you here. It hits a 52-week high on the relative strength line and the stock is still in the base. For me, I think this is one of the strongest signs of strength a stock can possibly give you. It's basing, it's building a flag, a wedge, a pennant, a Davis box, a VCP, a cup and handle, whatever it may be, some funky ascending triangle, okay, symmetrical triangle. But in the base, before it even breaks out, it does this. Hits a 52-week high on the relative strength. That's a little subtlety to go, wow, that there is a strong stock. And then you can see the explosive move, okay, there afterwards. Let's keep going through, okay, back into the late 1970s, 1980s here, okay, like HP, for instance. See how this stock here, okay, it's kind of like a VCP if you studied Minervini's work. One contraction, two contraction, three contractions, high lows. Here you go. One contraction here, two contractions here, three contractions here, high lows, tight, like back-to-back inside days on the 10-day EMA. Super duper tight, that stock there. If we were to look at, say, Walmart, this is back in 1981, okay? So many of you would have heard about Walmart. Here's the chart from 1981, October 1981, when it was much more of a growth stock. Look at these blue dots. Appreciate it's a little bit hard to see, but again, you can go and access the platform. You can then download this, and you can look at these in more detail for yourself. Create your own setup books as well, okay? This is the level of detail I think you need to go into. Create your own model books for the setups that you think, wow, that's a fantastic setup. I love that setup. Okay, maybe that's a trigger bar. Maybe it's what I call a shakeout demand tail or a gap down reverse bar. But you want to create your own model books. I have all of my model books, thousands and thousands and thousands of pages of annotated charts like this. So I can see Walmart here, okay, pulls down, finds support along the 21-day EMA, and then goes tight sideways for about 3 days. Look how the volume dries up on that bar there, and then it just comes powering out of the gates there. Let's fast forward a little bit, okay? Later 1980s here. Can you see that it's just the same thing? Just keeps happening. Let's take a look here. This is SHYF. See how the stock moves up here? Nice uptrend. Starts pulling in, finding support around key daily moving averages. Note the tightness around the 10-day, 21-day EMA. Note the extreme dry up in volume. Note the blue dots coming through, the 52-week highs on the relative strength line. It's the same thing. If I was to fast forward like this, okay, now we're in the late 1990s, okay, 1997. Look at Amazon, okay, Amazon, 1997. What do you see? The stock starts building a basing action, pulls back into the 50. There's actually an inside day right there on the 50. Pops, pulls back, low volume, inside bar, sitting around a clustering of key daily moving averages right there between the 50 and the 10-day and the 21-day just above it. And then what I like to do here is oftentimes I'll use a buy stop limit order. So I'm targeting it through the high of the trigger bar, stop loss usually a cent underneath the low of the trigger bar. If we look at RES 1997, powerful move up, stocks drift sideways, tight like this. The volume dries up, 52-week highs coming through in the base. And this is leading on from a timeless phenomenon that Toby Crabell taught as billionaire hedge fund manager. From periods of price contraction come price expansion. So we're looking for, with trigger bars, we're looking for that area of price contraction. FLR, May 2001, pulls in, bounces from just above the 21-day EMA, gets tight here. This is like trigger bar-esque as well, but this one over here, even better. See, just tight 3-day pullback, inside bar just above the 10. The volume dries up. Look at the 52-week highs before. If I scroll forward like this, now we're in 2010. Do you see how it's just the same thing? Do you see what I mean? The stock is in an uptrend. It pulls in, finds support around key daily moving averages. It builds a variation of a flag, a wedge, a pennant, a Davis box, a VCP, ascending triangle, symmetrical, whatever you want to call it. But they're pretty much just doing the same thing. And then what you tend to see as well is very similar constructive candlesticks in bases around key daily moving averages. Now for me, if you watch the blueprint video on the YouTube channel, you'll recognize trigger bars, shakeout demand tails, gap down reverse bars. That's what I call them to internalize it for my own mental representations. So if we take BHC here, July 2010, powerful move up, look at the volume, look at the 52-week highs, pulls in, bounce off the 10-day, pulls up, pulls back in, higher low, inside day, 10-day EMA, volume dries up below the 30-bar average. Let's fast forward again. 2019 here. Tesla, really a little bit hard to see this one, but tight, low volume, looks to be just about an inside day on the 10 and 21 day EMA. Let's go forward again. If we go for, what stocks are you guys going to recognize? AMD here. This time, appreciate a little bit hard to see, but 10 day EMA, 21 day EMA, 50 day SMA, low volume inside bar. Look at the size of the base the stock builds. A law of cause and effect. Big causes, so big bases tend to lead to big trends, okay? Cause and effect. Bigger the base, bigger the effect. Great move to the upside there with AMD. Fast forward again. GME, okay, low volume inside bar before it went absolutely crazy on the 10 day, 21 day EMA. Let's see if we can find some other ones. RCL, which is a cruise liner, okay, low volume inside bar, 10 day EMA when the stock had been basing and building this quasi Davis box. Oracle, big stock, sure many of you will know about it. Nice uptrend here, starts pulling into the key daily moving averages, 10 day, 21 day EMA, low volume inside bar, hits a 52-week high on the inside bar. It looks to be just about an inside bar in the base, and then a really nice move. Let's go forward into 2024. Abercrombie and Finch, when this stock was on an absolute tear, powerful move up, great shakeout on the earnings, pulls in 10-day EMA, trigger bar, low volume coming through, 52-week highs as well. Let's go through for a couple of more. Let's see if we can find some other ones that are kind of widely known. JP Morgan, so here inside bar when banking stocks, the JP Morgans, Morgan Stanley, Goldman Sachs were showing a lot of relative strength 2024. Look at the 52-week highs coming through, so it bounces, builds this kind of quasi cup with handle, shake out off the 21-day inside bar, 10-day EMA, volume below the 30-bar average. It's just the same thing. Like, it's just the same thing, continues to keep on happening. Let's find another one. CEG. Okay, one of the leaders of the clean alternative energy theme. Look at this, powers up here, pulls in, really tight bar in Feb 2024, sitting right there on the 10-day EMA. So hopefully just by going through this slide deck, and if I was just to wind back in time, and let's just go pick some kind of random place in time, okay, go back to here. Do you see how the examples from 2020, 2024, 2015 are exactly the same as the examples here from 1989? Okay, nothing has changed. Okay, leading stocks move in very, very similar ways. They trend up, they pull in, they find support around key daily moving averages. For me, I use the 10-day EMA, 21-day EMA, 50-day simple period moving average most commonly as my reference point, sometimes the 65-day EMA. And then I'm looking for said leading stocks that are hitting 52-week highs on the relative strength line, preferably have really good earnings, really good sales growth, really good EPS estimates coming through. Ideally, they're in a very strong group or theme in the market, then form these type of Japanese candlesticks, such as trigger bars, so low volume, oftentimes tight inside days around those one or more key daily moving averages. Again, that's 10-day EMA, 21-day EMA, or the 50-day simple period moving average. So not rocket science, but what I would say is there's work involved like this to go and train your pattern recognition to see how do these leading stocks move, how do they move, what do they do, what are the repeatable characteristics that you tend to see. So thank you very much for watching that YouTube video. I hope it's helpful for you in your own trading as well, and to get you on the path of thinking about creating your own model books with your own setups that you just know inside and out. So thank you very much for watching, and as always, I look forward to seeing you in a future video.